People imagine money printing as machines spitting out stacks of cash. But what if I told you that most of the money printing that shapes your life, your job, your rent, your future never involves a single sheet of paper? What if the real expansion of money happens in places you never see, through mechanisms almost no one understands, and often without a single democratic vote? Today, we're uncovering how central banks can create trillions of dollars quietly, instantly, and sometimes accidentally, while the world barely notices. And once you understand it, you'll never look at your bank account, your government, or your economy the same way again. To see how this invisible money printing works, we need to go back before digital banking, before the Federal Reserve, before modern governments even had budgets as we know them. Because the secret of modern money didn't start with printing presses. It started with a promise that the value of money would be backed by something real, then by something else, and then by nothing at all. The key players are central banks, the Federal Reserve, the European Central Bank, the Bank of Japan, and dozens of other institutions with enormous power but almost no public visibility. And behind their polite technical language lies a twist that changed the world. The moment they discovered they could create money with a keystroke. But that discovery didn't happen all at once. It happened through decades of crisis, experiments, and political bargains, each one pushing the world closer to a system where money could be created without limit, and without anyone seeing it happen. Act 1. Origins. When money needed something real in the early 20th century, money was simple. It was backed by gold. Every dollar represented something physical stored in a vault. This meant governments couldn't create more money unless they had more gold. It put a leash on power. But in 1913, the Federal Reserve was created. Its job was to stabilize the economy, manage banking panics, and keep prices steady. Central bankers were supposed to be guardians, not magicians. Even then, they could only expend money supply within strict limits. But wars have a way of changing limits. World War I, then World War II, forced governments to spend beyond what gold allowed. And each crisis brought a workaround, a temporary exception, a just this once expansion. Until the temporary became permanent. The breaking point came in 1971. President Nixon ended the gold standard entirely. Money no longer needed gold. It needed nothing. With a single announcement, the financial world snapped into a new, untested era, fiat money currency backed only by government decree. This released central banks from their old constraints. They no longer printed money with machines. They now printed it with policy, interest rates, open market purchases, bond buying programs, forward guidance. Each tool was a lever that could increase the money supply without anyone outside the banking system noticing. Central banks discovered the power to create digital money that never touched paper, never entered circulation as bills, yet reshaped the economy every time it moved. Act 3. The breaking point, when trillions became normal. For decades, this invisible money printing was used sparingly. But in 2008, the restraint vanished. The global financial crisis unleashed the era of quantitative easing, better known as QE. The Federal Reserve began buying massive quantities of financial assets, mortgage securities, treasury bonds, and more. But here's the twist. They didn't buy these assets with tax money. They didn't sell anything to pay for them. They created the money electronically, with a keystroke, hundreds of billions, then trillions. Invisible to the public, visible only on balance sheets. And other central banks copied the strategy. Europe, China, the UK. What began as an emergency measure became a habit. Then 2020 arrived, and the numbers exploded beyond imagination. Trillions created in months. More than all QE programs combined. Money injected into financial markets at speeds no system was designed for. Act 4. Fallout. The cost of invisible money printing doesn't make headlines, but it does have consequences. Asset prices soared. Stocks, real estate, bonds. Wealth gaps widened dramatically. Inflation, once calm, suddenly returned with a vengeance. People felt it in rent, groceries, and energy long before economists admitted it was a problem. Central banks tried to fix the fallout using the same tools that created it: interest rates and more asset buying. But the medicine began acting like poison. Raising rates crushed borrowers. Cutting rates fueled asset bubbles. Buying bonds inflated markets. Stopping purchases deflated them. Every fix created a new fracture, and the system grew increasingly dependent on invisible money to stay afloat. Act 5. Modern parallels patterns were still repeating. Look at the last few years. U.S. household debt is at record highs. Governments worldwide run deficits larger than entire industries. Global central bank balance sheets exceed $30 trillion. And more than 90% of new money today exists only digitally. Nothing like this has ever existed in human history. And the pattern keeps repeating. Crisis hits, gives central bank prints, gives markets calm, gives inflation rises, gives rates increase, gives something breaks, gives something breaks, gives central bank prints again. It's a loop with no clear exit. The real mystery now isn't how central banks print money. It's how and whether the system can survive relying on it. Big takeaway number 1. Most money printing today is digital, invisible, and happens through central bank balance sheets, not physical cash. Big takeaway number 2. Each crisis expanded the role of central banks, turning temporary measures into permanent infrastructure. Big takeaway number 3. The long-term consequences: asset bubbles, inequality, inflation aren't glitches. They're built into how modern money is created. Final warning. If the system only survives by creating more money, then the next crisis may not look like the last, and it may force the world to rethink what money even is. Call to action. If you found this breakdown helpful, hit like, subscribe, and share this video. The more people understand how money really works, the better prepared we all are for what comes next.